Hello, everyone. Welcome to this event on aligning profits with sustainability in Latin America and the Caribbean. This session is co-organized by Alpha Mundi Group and the United Nations Development Program, UNDP. We're going to have a fantastic panel with entrepreneurs and people who is investing in the region for impact. So actually doing, aligning those profits with sustainability really in practice. And but before we move to the panel, we're going to hear opening remarks by Saba Sobhani, who is the director of the Istanbul International Center for Private Sector in Development. Saba, please.
Distinguished panelists, Maria Teresa Zapia, our moderator, ladies and gentlemen, welcome and thank you for being with us this morning. I'm Saba Sobhani. I'm a director at UNDP, working on the private sector agenda. As we know, Latin America and the Caribbean is home to close to 670 million people, encompassing countries with diverse economic, social, and political foundations, but also similar undercurrents. The region has made significant development progress over decades, leading to middle income status and improvement in life standards, life expectancy, and access to education, among others. But progress has stalled due to structural barriers to sustainable development in the region, such as low and volatile growth, informality, and high inequality. Note, for instance, that the richest 10% in the region earns 22 times more than those in the bottom 10%. The COVID-19 pandemic has also caused disproportionate suffering in the LAC region in terms of number of cases and deaths, exacerbated underlying conditions, and revealed the fragility of hard-won development gains. But social fractures were evident before the pandemic, as manifested by rising social unrest and demands for change across the region already in 2019. Beyond income, other inequalities stubbornly persist in Latin America and the Caribbean, such as unequal access to opportunity and basic services across localities, with implication for intergenerational mobility across ethnic groups because ethnic minorities lack sufficient recognition as political and economic agents, and gender. Gaps in labor market participation and unpaid time spent in care work, for example, keep women disadvantaged in an unleveled playing field. Inequality contributes in low productivity and thus helps explain the region's under-potential performance. Unequal countries underutilize the talent of parts of their population which could be otherwise put to service of the economy and society at large, and undermine the chances of these groups to reach prosperity. Going forward, in recovering from COVID-19 and working towards the realization of the SDGs, it seems essential to raise the potential for inclusive growth in the region, moving towards developing productive and technological capacities, supporting the energy transition and decarbonization of the economy in a way that promotes social cohesion and addresses inequality. More, with higher public debt levels, rising borrowing costs amidst high local and global interest rates, countries will need to ensure the sustainability of public finances to help preserve credibility and rebuild fiscal space. Against this backdrop, the importance of mobilizing private, domestic, and international finance that contribute addressing the development needs of the region is more important than ever. And here we're encouraged by the fact that the LAC region is not the exception to the global trend of growth in sustainable finance over the recent past. We see increased interest by investors, including in this room, in terms of a wide range of products and the encouragement of the public sector through policy and other types of de-risking instruments and facilities. The number of subscribers of the Responsible Investment Principle tripled in the region between 2019 and 2020, reaching 150 with nearly 1.5 billion in assets under management. We see diversity in products with greater demand for themed fixed income bonds, such as green, social, and sustainability bonds, both in private and public sector, as well as sustainability-linked bonds and ETFs, integrated ESG consideration also, for example. Governments in the region are also playing an important role by establishing guidelines, standards, and regulation and participating in the market themselves with sovereign issuances, helping to establish the market infrastructure and enabling environment to allow capital with purpose to identify and seize business opportunities. We have seen regulatory authorities defining standards for the issuance of SDG green bonds, for example, and several countries in the region are collaborating with international organizations and various stakeholders towards the establishment of a common framework for sustainable financing taxonomy. For example, in Paraguay, in Colombia, and we'll hear more, there were guidelines issued from 2016 in terms of SDG and green bonds. And also in Chile, there were requirements demanding pension funds to incorporate ESG and climate factors in their investment. But starting from far, there are great potential for accelerating the trend in the region, and most importantly, ensuring that the sustainability and SDG claims translate into real net positive impact for people and nature across countries. We will hear in our panel today about the experience of investors and entrepreneurs who are leading the way in Latin America and the Caribbean with their innovation and focus on impact, as well as other market enablers that, like my organization, UNDP, that aim to facilitate the alignment and mobilization of finance for the sustainable development across the world. We would also like to hear from you about how various actors in the public, private, domestic, and international domain can better collectively work together to advance sustainable development results in the region through finance. So look forward to hearing about your experience and initiative. I look forward to a very engaging panel and discussion, and I'm pleased to pass the mic to Maria Teresa Zapia, Deputy CEO, Blue Orchard, and Head of Sustainability and Impact at Schroders Capital, our moderator for the session.
Well, first of all, I'd like to say thank you for UNDP and Alpha Mundi for sponsoring this session. Before I introduce the topics of the session, I'd like to say a few things that are really dear to me. First of all, you will see that in the panel that we have actually representatives from the region. So we're talking about Latin America, but we will have colleagues from Colombia. Exactly, thank you. So a number of panelists from the region. Also great to have the people from the region in the room. Also, it's the panelists will bring in experience both from a private enterprise perspective and from a public sector perspective. So we have representative from UNDP, from private enterprises, from asset management company investing in the region. Said this, I'd like to set the stage and say what are the objectives of our session. So we want to analyze sustainable trends in Latin America. As a colleague from UNDP introduced, this is a region that has been heavily impacted by COVID. As you know, we have as many as 77 million people that have actually been additionally into poverty as a result of COVID. Still, the region has been really distinguishing itself as well for innovation. For example, there is a notable green and sustainable bond issued by Mexico for as much as $750 million in 2022. So in addition to analyzing the trends in sustainable finance in Latin America, we will talk about public-private partnerships. Again, we are very well placed, given the representatives in the panel, to talk how private entrepreneurs can really link up and receive, if you want, capital also from the public sector. And also learn from UNDP on some tools they've been using to, in particular, develop some bonds for the region, but also tools in terms of impact management and measurement. Said this, I'd love to say a few words about Blue Orchard. We've been asked to moderate the panel because we have been actively investing in the region for the past 20 years. Out of almost $10 billion that we invested globally in emerging and frontier markets, in as many as 90 emerging and frontier markets, we've invested more than $3 billion in Latin America alone. And when I talk about Latin America, it's really Latin America and the Caribbean. And what is interesting about this portfolio of investments of over 3 billion is that this has been in a range of different sectors and asset classes. So we have today a public debt portfolio in climate bond, SDG, and SDG bonds of approximately $1 billion, and a third has gone actually to issuances in the region. So bonds issued by renewable energy companies, financial institutions in the region. In terms of private markets, we've been active in financial inclusion, so working with financial institutions to really support small and medium enterprises. And also, we have been more recently being active in private equity in climate adaptation and sustainable infrastructure. Our last initiative is on which we are working very hard with the team in Blended Finance. It's actually a blended finance vehicle in Latin America and the Caribbean for gender diversity and inclusion. Said this, I'd love to invite my panelists on stage, probably all of them at the same time. And I've seen that Tim has also been able to join us. So please, I'd love to have all the panel on stage. So the way we structure the panel is first, a round for the different colleagues introducing themselves or their business. And doing this, I'd love to start with Tenke Zoltani. So Tenke is here representing UNDP. But I can say that she has done a lot of different, advisory positions in the past, and now she is effectively senior thematic debt advisor. And Tenke, thank you very much,
and thank you for the time today. So indeed, I'm a senior thematic debt advisor for UNDP, which entails a portfolio of about 40 countries right now that are very active in moving towards sustainable debt issuances. So within that capacity, I will highlight some of the opportunities that we've been engaged with in Latin America and some of the successes that we've had, including mentioning one or two which are forthcoming. So thank you.
So as you can see, this is a typical expertise in debt issuances for the region, so very, very interesting. And if I may, I'll sort of be a bit free on the script. I'll have to also hear the entrepreneurs in the region, and maybe we started Juan Diego.
Thank you. Hello? Yes. Hi, I'm Juan Diego, founder of Zoom Colombia, a digital vertical integrated utility.
Great, fantastic.
And hi everyone, I'm Guillermo Pepe. I'm founder and CEO of Mamotest. Mamotest is a diagnosis and patient support digital platform that is defeating breast cancer. We are operating in Argentina and Mexico right now.
Excellent. And last but not least, Beatriz from Symbiotics.
Yes, good morning. So I'm Beatriz Elias. I'm the head of credit and market risk at Symbiotics, which is an impact investing firm based in Geneva with more than 15 years of experience in the field of impact investing, also based in 10 different other locations in emerging markets. Originally mostly focused on microfinance, but more and more expanding to other impact sectors such as renewable energy. Thank you.
Excellent. And then Alphamundi, represented here by the CEO, Tim Raji. I think Tim has been in every panel and different sessions, so I think most of you probably know him by now, but Tim, would you like to introduce yourself?
Thank you very much. It's a pleasure to be here. So Tim Raji, founder of Alphamundi Group, and maybe I'll just do the personal side of things. As all of you are familiar with Alphamundi, my grandparents were born in Bolivia. My mother was born in Chile and raised in Switzerland. My wife is Colombian. So I have very personal, strong ties, historical ties to the region. And for Alphamundi, we've been investing in Latin America since 2009 with our investment team based in Bogota.
Great. And actually, Tim, I'll pick on you as the first intro to the panel discussion. So, as you said, Alpha Mundi has been active for several years, very keen on sustainability and impact investing. What are the opportunities and the challenges that you see in the Latin American Caribbean region?
Thank you. So in our history, we've by and large have had a very good experience investing in Latin America across a number of countries. To be specific, we have not invested in Brazil and in countries like Argentina or Venezuela, but we have invested in most other countries. We've done it mostly through debt, senior debt for working capital for SMEs, with, on some occasions, private equity stakes that we take in the companies that we support. We also have a corporate foundation that has increased the range of our opportunities and pipeline by making donations to early stage companies that we hope to get investment ready for investors like ourselves. And I have to say, of course, Latin America is a mosaic of socioeconomic realities, of political realities. There's been a strong political shift to the left in recent times. We've got the left in power in Chile, now in Colombia as well, in Mexico. It looks like maybe in Brazil as well. And if you look at the history of Latin America over more than our investment experience, it's always been this pendulum of history between two visions for Latin America, one to the right and the other one to the left, but it's more marked in Latin America than it is, I think, in most other regions of the world. Latin America is, of course, one of the lungs of the earth, with all of its Amazon resources and pristine forests. It is also a land of great inequality. If we've seen that donor flows to Latin America have reduced in favor of Africa, and that's good for Africa. But in Latin America, I feel that some people have thought the job is done because the GDP per capita has risen. But in fact, if you look at the reality inside the countries, there is still tremendous inequality, and very often a handful of families control, or a handful of companies control most of the GDP of the country. So that's something that we as impact investors try to address and change. We try to finance a transition to a sustainable economy across different markets in Latin America. That involves environmental impact, and it involves social inclusion as well. Alpha Mundi is a big ambassador for gender lens empowerment in particular. And if I look at the threats and opportunities in Latin America, I feel that in general, as an international foreign investor, it's okay for you to invest in the country because the rule of law and the predictability of government policies towards international cash flows is relatively good, quite reliable, versus other emerging markets. So for us, the main risk doesn't come from that. The issue is that most of the SMEs that are the source of innovation and the source of economic transformation in developed countries, in Europe and in the US, do not yet have access to sufficient capital and to capital on good enough terms. And so there is a job that we need to do to, in a way, be an alternative source of funding for SMEs in the region until local banks and financial institutions are able to invest adequately in this key segment of the economy that are SMEs. In particular, we haven't seen yet pension funds in the region invest significantly in the sustainable future of their own countries. We hope that will change, but they are constrained by regulations. So the governments need to be educated, and that's why it's a long-term strategy that we need for the region so that it can use its own capital, its own talent to create a sustainable future for itself. Thank you.
Excellent. Thank you very much, Tim. And actually, as a sequel, you've been talking mainly about impact investing in the context of private markets. But of course, I was saying before in the introductory remarks, I mean, the region has been very, very prolific in actually issuing bonds and so public debt instruments. And with this, I'd like to leave the floor to Tenke so that she can tell us about the experience of UNDP in this large issuance. I think one and foremost in terms of size, but also, for the region of sustainable bonds. And how has this happened, and what could be, exactly the next steps in terms of public markets development in Latin America?
Sure. So I think you mentioned the Mexican opportunity, which we, as UNDP, were very proud to be a part of, issuing an alignment letter with regards to how aligned the SDG uses of proceeds were. It's a role that UNDP is very proud of, that it's playing across the region. So I think as an institution, due to the country presence, we have a very strong understanding of where are the SDGs being delivered and where are the opportunities. And this is something that we're plugging more and more into debt issuances, not just in Latin America, but globally. I can point to the forthcoming issuance in Uruguay of the second ever sustainability-linked bond. So Chile was the first to issue, Uruguay not too far behind. Here, again, I think as an institution, our heart and soul are the SDGs. These are very important, I think, to forthcoming bond issuances. We've seen a lot of greenwashing in the market, a lower emphasis on green bonds and a greater emphasis on thematic bonds. So issues linked to gender and environment more and more. So I think the landscape is one that's emerging both for investor appetite, where there's a strong use of proceeds tied to development, that we're seeing also financially reflected in a greenium. So it's in fact a premium that is paid. It's argued by the banks whether it exists or it doesn't, but the UNDP research points to the fact that it does, which are effectively rewarding those issuers that have a very strong sustainability focus. So I think we have a few favorable pricing mechanisms. Of course, right now the market is very volatile and uncertain, so I'm not going to reflect on what the forthcoming 6 or 12 months are looking like, except to say that investor appetite is still strong for these types of instruments. And the regulatory landscape, I know it's one of the questions for today, but it's hard to generalize here. As Tim mentioned, the continent is a mosaic, so it really does depend on where there's more favorable regulatory regimes, or as Saba mentioned in the opening remarks, pension reform and pension funds that are in fact encouraged or mandated to invest in sustainability. So I gave you a bit of a high-level answer, but happy to get into greater detail.
Fantastic. Thank you very much, Tenke. Now, remaining in the public debt market, as I said before, at Blue Orchard we have two public debt strategies. One is really in green bonds, sustainability bonds, and the other one is an SDG, emerging market bond fund. So this has been really something interesting for us, really bringing liquidity into a market that is generally liquid. Our experience has been, quite different from the one of Symbiotics, where Symbiotics has, in fact, almost built a business really line in terms of, let's say, assisting financial institutions in issuing their own bonds. And I'd love to ask Beatriz to particularly cover the experience of FACES in Ecuador, an institution that many of us have been financing over the years, but of course was, groundbreaking, the fact that they, finally issued the bonds. And Beatriz, if you'd like to say a bit more about really the technicalities of the bond and the objectives.
Sure, thank you. So indeed, at Symbiotics, we have our own bond issuance platform since 2010, where we've been issuing impact bonds for a multitude of mostly financial institutions. And usually through these bonds, we're trying to help these institutions to get also exposure in international markets. The bonds are listed in Luxembourg, so it's a way to using the building bridges to bridge this gap and bringing them closer to these international investors. And specifically with the case of FACES in Ecuador, it's an investment that we're really proud that Symbiotics, it was a great achievement of our team in Latin America, because FACES is a microfinance institution operating in Ecuador for more than 30 years. They have a very solid background in providing loans to female micro-entrepreneurs working in the agriculture sector. And we've been partnering with them for many years, for 7 years now, mostly helping, to fund and to promote their microfinance activities. But in 2019, so just to show how sometimes these things, they need some nurturing. So in 2019, we were very excited with the news that FACES was working to develop a new product, because they wanted, beyond providing social impact through their microfinance activities, they also wanted to promote environmental impact. So they created this green loan product together with the IDB, the Inter-American Development Bank. where they would use these green loans to finance these micro and small farmers in Ecuador that were working towards sustainable agriculture practices. And when we think about sustainable agriculture, it can be considered a complex topic in some cases. When you have to estimate reduction in greenhouse gas emissions, the impact to the soil, the use of water for irrigation, you need a lot of data and analysis to really be able to work with sustainable agriculture. And there was this idea that doing sustainable agriculture with micro and small farmers would be very challenging to obtain all this information. So FACES did a great work with the support of the IDB and also working with Symbiotics to break down such complex topic into very user-friendly questionnaires, mobile apps, so using technology to gather this data and be able to launch this green product. So we were very excited to partner with them. So nurturing this idea, this product since 2019, and then being able to be there on their side to issue their first green bond, which happened this year in July for an amount of $5 million. And one just less interesting fact about this transaction is the fact that today in Ecuador, there are only 3 very large banks who have issued green bonds. And I think this transaction with FACES, which compared to those large banks is a relatively small microfinance institution, it helps to demystify the idea that green bonds are only viable or a type of product that can only be used by large companies, by large banks. So we see a lot of potential with these kind of green bond emissions, be it for small or larger companies. This is a big strategy for Symbiotics.
Thank you very much. So as we said, the private markets investing, public markets investing, but where are the entrepreneurs? So I was asking as we're getting acquainted with Guillermo, where is he based? And he said, I'm a nomad, which means everywhere and nowhere, but always in Latin America. So Argentina, and he said Colombia, Mexico. These are his 2 markets. So would you like to tell us a bit more about your enterprise and how have you been really contributing to sustainability in the region?
Sure, Maria Teresa, thank you. Well, Mamotest, what we want to do is we aim to drastically decrease the number of women dying of breast cancer. Breast cancer is the #1 cause of death among cancers of women in the world. 700,000 women die annually because of breast cancer, and 70% of those deaths are in developing economies, such as the Latin American countries. So we started to research a few years ago why women were dying of breast cancer in Latin America. We found out that there were many barriers that were separating women from having access to early diagnosis. So in the beginning, we believed, like everyone else, that by democratizing access to early diagnosis, we would be solving the problem. But through the years, we found out that it wasn't enough. It wasn't enough to just generate the access to early diagnosis. Why? Because in Latin America, the healthcare system is broken. Yeah, it's very complicated to navigate. It's highly fragmented. It doesn't share data about patients. So even if you are democratizing access to early diagnosis, a woman that is diagnosed, they don't know what to do. And that was something that when we started, many people pointed out. They were saying, hey, you are democratizing access to early diagnosis, but what about then? What happens when they get diagnosed? And I thought that governments would do something about it, but it didn't happen. So a few years ago, we decided to start taking care of the whole thing, and we started using technology in order to do that. We started developing and implementing a digital platform that democratize access to early diagnosis and patient support. So once we diagnose women with breast cancer, we start following them throughout the entire patient journey until they get to a treatment on time and they save their lives. So we help them by moving from step to step after after having the mammography, to get to a breast ultrasound, a biopsy, a lab test, appointments with oncologists, mastologists, and even to get to treatment. So this is the way we would be really saving lives in Latin America, saving women's lives, and it's proven that it's the only way. It's having this comprehensive approach of where you can have 100% traceability of the patient, of the women. And today we are applying this for breast cancer, but this model could be applied to any other type of cancer or maybe any other type of disease.
Excellent. So continuing the sequel with entrepreneurs from the region, I'd love to have Juan Diego telling us a bit more about San Colombia and how it has been able to, deliver on its impact, but also attracting private capital.
Thank you very much. Well, this Sunco has been a journey of 8 years, a strategy we start with my partner, who was coming from the fintech side, and we were trying to do a Latin American model for the energy access to bring financial inclusion. During 8 years plan, we were just developing technology that allow us to actually measure and deploy a proper service in the communities. We have the chance that the government was investing $100 million yearly in solar home systems, so we didn't have the African case, and at the same time we were close to the biggest fintech in the country. So we have enough capillarity. There was a huge capex deployed, but at the end of the day, there are 3 things that you need for our business to work in these cases. You need the government, regulation, you need banks, and you need a technology. So it took almost 8 years for that to happen. And when all those 3 things came together, it was like a perfect storm for us. That made us, during this 8-year journey, become not only this digital decentralized company that is helping to provide access. We started with energy, then we start with access to communications, then we're bringing water, and right now we're bringing digital products. So with the same customer that it was not a customer for anyone, now it's a great customer for us, and we're bringing all those services together. So that made us create a bunch of products, and that bunch of products we created were all designed and in somehow based on the SDGs, not by chance. We actually place our strategy designing products that could meet SDGs. For example, we have solar hubs, which are actually schools below it. We have libraries, we have water hubs. So at the end of the day, we were able to actually develop products that were meeting SDGs, that they were doing impact, and they were profitable to us because we were selling these products to the utilities who are willing to come into the territories and create impact.
Fantastic. So now, I mean, everybody's talking about generating, building positive change, but the big question out there, I mean, the elephant is in the room is always how do you actually measure impact? And we know that investors are more and more being, demanding that there is transparency, disclosure, that there is, as you said before, traceability of results. And of course, I guess one of the myths is that measuring impact in private markets is easier as you have a direct exposure than in public markets. So said this, Tenke, I'd love to give you the floor and see how, as you said, facilitating issuances at country level for green sustainable purposes. How have you been able to address the challenge of measuring impact in the bond market?
I would also love to hear from the colleague working in Ecuador on the green bonds specifically, because I mentioned the issue of greenwashing and the shift away from green bonds towards more thematic bonds, and it's a response to this point because I think we've had a lot of very interesting green bonds with, I would say, a relatively vanilla use of proceeds, well understood, renewable energy, infrastructure, et cetera, where investors did not yet really ask those questions on what were the green impacts, were we reducing CO2, what was the case. Part of the reason that UNDP has accelerated its investment and resources in this space is exactly to prove those links with the SDGs and why we've developed this thematic bond offer. So I would say it came partly in response to the pandemic, where especially small island developing states had come to the UN and said, we are having problems around tourism collapse, around nature being harmed, et cetera. We'd like to show investors, A, we need a fiscal space creation, but B, we also want to show investors that the uses of proceeds are tied to verifiable, accountable long-term outcomes. So I think UNDP boasts a very strong country presence around the world, so it has many programs in place where impact monitoring and reporting is already part and parcel of what the organization has been doing for decades. So I think that's a big advantage versus other organizations that have to hire third parties or consultants, and I think that's also great work. I've done a lot of that myself, but having a country presence and knowing the communities well means that oftentimes the impact reporting is easier, but probably what is central to this is having a sound framework, so ex ante, agreeing with the issuer or the investee, what are those key performance indicators that we can capture, and then ex post, having a system in place to monitor that, be it quarterly or semi-annually, whatever is appropriate based on the profile of the instrument and the capacity of the investees. But I'm also conscious that Tim has a lot of experience on the impact monitoring side and certainly through the foundation. But that's the UNDP approach. So it's framework tied, very SDG linked, and it's transparent.
Fantastic. So before giving the floor to Tim, actually I want to go to Beatrice. And as you described in your opening remarks, FASES Ecuador was a long-term client of Symbiotics. As I said, likewise on Blue Orchard, we have been knowing them for a very long time. And I guess what would be interesting to know is, for example, today, if you are an investor in the FASES bond, what is the type of indicators that you are able to share, and how often are you collecting this information, and how granular can it be, as we said, since it's still a bond issuance?
No, I think these are very important questions for the sector where we are operating. As an impact investor, as Symbiotics, this is in our DNA, impact measurement and transparency with investors, because investors, they come to us looking for it, not a traditional investment only for financial returns, but also where they can monitor the impact that those investments are promoting. So definitely, I think in terms of impact measurement, we tend to look at it into 3 layers at Symbiotics. The first layer, which is the standard for all our investments and investees, which is the annual set of impact metric and standards that we need to monitor so that we can, again, report to our investors and monitor the progress. That's standard across the company. But when we talk about green bonds, so I would say that's the second layer, is definitely when we have to go one step further, because these green bonds, they come with a use of proceeds definition from the get-go of which type of objectives we're trying to achieve, so in terms of environmental impact. So definitely for those type of investments, there is an even more detailed set of impact indicators that need to be predefined with the institution from the get-go with FASES, and where they have to prove to us that they have also the capacity to monitor it on their own portfolio, and after report on an annual basis. When you ask about the level of granularity, so the responsibility of FASES is to gather that information on a loan basis. So for each small and micro farmer that they finance, they are capturing those data and they're aggregating it and passing on the information which is related to the amount of the green bond that we issued with them, and that is being used to finance those micro and small farmers. And as I mentioned, the type of information when we talk about sustainable agriculture, it can be very broad on all kind of indicators that have to be monitored. In the case of this investment in Ecuador, since we were talking about micro and small farmers, the focus was to look for a type of businesses of farms that were running low carbon production. So because of their size, because of the amount of resources that they use, they generate a low carbon emission. And so there needs to be enough information and indicators that show that they're not creating excessive greenhouse gas emissions. So first to be considered for this type of green loans, and further on to also monitor the progress of the level of resources that they use, so to see the ultimate results that we can have with this green bond.
Fantastic, thank you. So, and I mean, all of these, are financial instruments. So clearly, there is capacity to measure impact, which is, linked to the instrument and the vehicle itself. But going back to, the entrepreneurs, and I think in particular, Guillermo, you basically explained that access to the diagnostic of breast cancer is not, in itself already, the impact that you want to achieve. But it's more, how you do what you do with this information. So I wonder if you had, 3-4 impact, let's say, key performance indicators, what would these be in your business?
Yes, sure. From the early stages of the company, we started measuring everything at the company. And in the beginning, of course, as I said before, we were measuring how many women we were reaching, how many of them we were reaching at an early stage with breast cancer. Then we started to measure how many women we were reaching per year, comparing year to year, to see how we were improving, how we were expanding our reach, because at least 60% of women in Latin America don't have access to high quality breast imaging diagnosis. So those were the key performance we were measuring in the key performance metrics we were measuring in the beginning, but then we started to measure how many of them would get to a treatment and save their lives. Like for example, now 87% of the women that have get into the mammography system have got to a treatment on time and save their lives. We want to get it to 100, of course. We want to keep on improving. And in order to do that, we started to collect data like never before in the history of Latin America about breast cancer. That was a way to start, solving the problem for real. As they say, you don't improve what you don't measure. So we are really obsessed about traceability and measuring, and we are using that data in order to fund access to early diagnosis. The majority of women in Latin America don't have the resources in order to pay for diagnosis. And that was a big barrier, which we didn't know how to break down. But with time, we learned that the data we were capturing was really important for the healthcare industry. So we started anonymizing that data and structuring the way the industry wants it. And we are using that data in order to fund access to breast imaging diagnosis and patient support. So yeah, we are constantly measuring.
Fantastic, thank you. Thank you for sharing the experience. So it's, as Juan Diego was saying before, You know, you said it was a very long journey, 8 years, trying to get the attention of, you know, different type of stakeholders. And I assume in these 8 years, you clearly had enough time to really think, how am I going to measure success? What kind of impact am I going to, you know, first of all, deliver, but also be able to report on? So I'd love you to share with us your experience at San Colombia, please.
Yes, well, we had three major challenges in measuring impact, because at the end of the day, when you are doing your activities, you are doing it by purpose and not measuring. And then we find that we have not tangible information. We have tangible information, and then we have SDG impact information. So the first one, we started with our one spin-off from our fund, which is Acumen, and 60 decibels allow us to measure intangible information, non-tangible information about some of our impact in education, and that creates some specifics that allow us actually to produce and to create new products, because we have in somehow collected information that gave us a benchmark of about 400 companies that were similar to us. Something like inclusivity ratio, energy ladder, and others. And in the case of the inclusivity ratio, we found that we were way above Colombia and one of the best in the world. Then we have the second challenge was, if you are in the offline of grid world, the data is a challenge. We have developed a kind of metering device, and we want to give it to this device another like data abilities. We were collecting data from the energy behavior of people, and we needed to know what's going on. You can tell if they get a fridge, if they get another television. You actually get into their houses because you can tell any kind of energy consumption they're having.
That's pretty scary, by the way. I'm now feeling very cautious.
And then with that, we're collecting that data. By the end of this year, we'll have around 30,000 users data, and we're doing a data lake with proof of impact to actually measure very detailed that information. And the third one, we're working with the UNDP in the SDG impact standards. We've been working for almost a year now, and that's the other thing. We said we impact this SDG, but we really didn't know if we were doing it well. Now with the SDG impact standards, we know how we can measure that. So we have these three kind of impact measuring analysis in the company already in place and established.
Fantastic. Interesting also from my perspective that you actually talked about, you know, several platforms like, you know, 60 decibel that does, and client surveys, proof of impact. So really, clearly you did in these 8 years quite a lot of investigation of the best practitioners out there. Tim, I think every time we bump into each other, you always talk about inequality, the importance of delivering impact. And I know this is something that is really close to your heart. As you said, you're clearly family history and links to Latin America. And so I'd be very, very interested in, as you said, this inequality is still a very big topic in Latin America, and what has been, you know, Alpha Mundi's mission in terms of measuring, you know, building positive change and positive impact in Latin America.
Sure. So at Alpha Mundi, we look at impact in three different ways. One is a quantitative aspect that has already been described by the panel. So how many clients do our portfolio companies serve? What percentage of these clients are women or are living in agricultural communities? How many household members live in the house of each of these clients? And what sort of products and services can our companies develop for these secondary beneficiaries as well? So that's the quantitative impact. We look at the qualitative impact as well. What is the nature of the transformation of the quality of life for the clients who purchase products and services from our portfolio companies? And the third type of impact that we look at is catalytic as an investor. How have we affected the trajectory of growth of the company and the trajectory of a better livelihood for the clients of our portfolio companies? And these are not always easy. We have a lot of different industry frameworks and standards that we can use or that we have to report to. And maybe I can take a step back from our own practice to describe an issue that I'm seeing in impact investing in general from a measurement perspective. For those of you who want to know more about Alpha Mundi's impact measurement, you can follow us on our LinkedIn page, and tomorrow we will be publishing our new framework for impact measurement and management. The reason we decided to go public with this report is because we think we're one of the first asset managers in impact to combine all the different industry standards in a single framework to make it easier for our portfolio companies to report on what we require, and also to make it easier for us to collaborate with other impact fund managers and asset managers on holistic impact assessments. Now, taking a step back, less than 1% of the world's financial assets are invested with a measurable impact. So we who invest with a measurable impact will continue to improve our methodology. But I think we should not lose focus on the main issue, which is that we need to make sure that our impact methodology does not prevent other investors from stepping in. A lot of mainstream investors are a little bit confused because there are a lot of impact standards and because these impact standards are changing quite quickly over time. And so I want to make sure that we as an industry are not so perfectionist with impact measurement that it becomes a hurdle for more mainstream investors to add their capital, because really that's the end game, right? It's to have more capital invested with a measurable impact to finance the SDGs. The second thing is we find that for our portfolio companies, it tends to be quite a burden to have to report according to different standards for each of their investors. Most of our portfolio companies have local banks as investors, they have international investors as well, and in some cases donors. And that's, they don't have the bandwidth, they don't have the human resources to deal with that, but it's a must because otherwise they don't get the capital. And I wish that as an industry we could be more collaborative in alleviating the burden of reporting for portfolio companies. The last thing is, many of us who've been in this field for a long time, we've sort of taken impact for granted in a way, because we report on quantitative data to our investors. I don't think we get much of a pushback from our investors when we provide this reporting, and we feel that this is good enough. My impression, even at companies like Alphamundi, where impact is our DNA, is that we could do more to integrate impact in our investment strategy. In a way that allows us to invest with the same amount of dollars and generate more impact, right? And this is in a way helped by the new regulations from Europe on sustainable finance disclosure requirements, where we're really pushed to determine the negative impacts of our portfolio companies as well. It's not because you're an impact investor or you're an impact company that you don't have negative impacts, right? But sometimes we're not measuring them. For example, what happens to solar panels once they fall out of use? What is the recycling life cycle of these products? Or what is happening to the suppliers of agricultural components for sustainable food? I think that we can always do better and more. And the last thing perhaps is the cost, right? Because none of this happens without significant investment in time and resources. And most of us work from management fees on our portfolios. These management fees range from 1 to 2.5% usually. And we have to do a lot with that little money, right? Our primary duty is to manage the risk and returns and ensure that the companies can grow and our funds deliver on performance. And the amount of money that is left for impact measurement is quite limited. In our case, we're very fortunate, as Tenke pointed out, to have a corporate foundation, the Alphamundi Foundation. So we have received grants from governments to enhance our impact practice. And we use that to be proactive in impact promotion in our portfolio companies. For example, we have a partnership with Values for Women that is transforming the gender agenda of our portfolio companies over a program that lasts between 8 and 18 months. So change takes time, but it is worth the investment. But it happens the most efficiently when you have a long-term strategy and when you have collaborations with other actors of industry. And I hope that one day we will get to a more stable set of industry standards so that our portfolio companies have an easier time aligning their corporate strategies to these standards, and also mainstream investors have an easier time coming into impact.
Fantastic, thank you. And Tim has already anticipated my closing remarks on a call for action from all the different panelists on what can we do more to really be active in the region as both, financial and impact investors. So I guess, Tim, you have already covered this, unless you have a final call to action before I give the floor to other colleagues.
travel to Latin America if you haven't. It's a wonderful region. The people are amazing. It's so much fun to work with all the entrepreneurs there. There's a lot of talent. And I think we are at a critical time today to change the trajectory of sustainable growth in Latin America. So don't wait and act now. Thank you.
Excellent. So, Tenke, you are next on the call to action. What would that be for you if we're thinking really at this region? What could make the difference?
I will probably echo what I said on a previous panel because it's very related. So I think with the many investors and donors in the room, we're probably underallocated to impact. So I think it's a call to action to take a look at how your portfolios, be it an investor or a retail investor, how well you're diversified. If you don't have access yet to emerging markets or particularly Latin American bonds and they're available to you, then do ask or do make that part of your allocation.
Guillermo, I already know your call to action because you basically already gave me the numbers, right? You said moving from 87% to 100%. I think it's a fantastic number, but I let you speak in case there is something more to add. But I think that really talks for itself.
Yeah, my call to action would be, the other day I read somewhere that talent and intellect are everywhere. Opportunities and resources are not. And I think that we need, in Latin America, entrepreneurs need more opportunities and resources. There are plenty of entrepreneurs with great ideas and talent, and they need opportunities and resources. So yeah, and in order to get those resources, we at Mamotest are now in the process of fundraising in order to further expand our operation in Mexico and reach 300,000 women in the next 12 months in that country with high quality breast imaging diagnosis.
Beatrice, very different. We talked about FASES, so an institution issuing bonds, very different type of markets. What is your call to action that every financial institution that does microfinance in Latin America starts issuing bonds, or what would be your call to action?
I follow very much Tenke's message of the allocation into impact investing. I know it's not we don't expect a huge turn, but a small turn from institutional investors, it would already generate a significant amount of impact. And of course, since I've been talking about green bonds before, I think my call to action would be for this specific asset class, for institutional investors that sometimes feel a bit lost with the whole impact discourse, information, or concerned about greenwashing. The green bonds, they come normally with an additional set of impact measurements, information, certification, and especially in Latin America with huge potential for solar, hydro, wind projects. I see a very good match between the product and the market potential.
Thank you. And last but not least, Juan Diego.
Well, I will ask investors to start looking in Latin America as they did to Africa a couple of years ago, because in Latin America we have the lungs, we have probably the water, which is the next soil, we have the soil for agriculture, and we have amazing entrepreneurs and people that is willing to achieve goals. And one of the problems that we have is that there are not many investors looking that way, mainly in Europe. They're just looking to Africa, so it's not a small market and it has huge opportunities.
So actually, it's very interesting because at Blue Orchard we're now looking at natural capital. And natural capital is an asset class that is very well developed in Latin America, and there are lots of regions that basically say that this is, nature-based solution investments in Latin America are going to show the way to other regions, just because there's been so much, happening there. So it's considered as a more mature market in terms of the track record in investing in sustainable forestry. So it really depends as well, right, on the sectors. If I may add a call to action on the Blue Orchard side, I just want to share with you some numbers that really motivate our a new strategy tackling gender diversity and inclusion in the region. And these are numbers that I find fascinating and certainly asking for a very active investment opportunity. So women of color in Latin America earn 30% less than white women. And women in Latin America earn 45% less than white men. 43% of indigenous households are affected by material poverty. So, my call for action is that Blue Orchard will certainly venture into financing, gender diversity and inclusion in Latin America through our new strategy, because clearly there is so much that can be done, as was said before. But before saying thank you to my panelists, I'd love to see if there are any questions from the floor. We still have 20 minutes, 25 minutes, and some of you are just behind this, so please be able to, shout and raise your hand. Excellent. Ladies first, but I'll
Hello.
And if you can kindly introduce yourself. It is automatically on.
Okay. Hi, my name is Laura Mesa. I work for infrastructure in the financing of infrastructure projects in Latin America. And I would like to know the opinion from Blue Orchard, Symbiotics, and also Alpha Mundi relating with the situation, the political situation that now the Latin American countries are living, high inflation. And also, I don't know how this affects the interest rate that you are lending to all the micro infrastructure business that you are having there.
Great. Shall we take the second question, and then I think there was a question back there. I think we take 3 questions. Yeah.
Afternoon or morning. Damian Pyatakis, Head of Sustainable and Impact Investing for Barclays in the Private Bank. Very connected to the region, interested in it in general. One of the important things to consider that I think we always struggle with is the absolute case that you're all making is excellent, but the relative case is always a challenge for introducing these type of investments to private families and individuals. So I'm interested to hear from members on the panel where you've been able to access capital through channels like ours. What have been the key differentiators to make sure that you made it onto panel relative to anything else that we could be doing? Because for most investors, given lack of familiarity, et cetera, that we all know about, it's always a challenge. So I'm curious about what has been useful in making the case to get on panel in private banks and other places.
Excellent. Maybe we'll start with these two, because otherwise we're forgetting the questions. So I guess, Beatrice, you want to start on the basically question, what is the impact of current market conditions on your investment strategy for Latin America? And then maybe I'll chip in as well.
Sure. So I think for us, we're tracking the impact of the inflationary pressure on 2 sides. On the institutions that we finance, mostly if it's increasing the challenges for them to operate. Since we finance a lot of microfinance institutions, if there will be a higher level of delinquency of businesses that are struggling because of the current market. And luckily, I think since my personal experience and professional experience with Symbiotics is 100% focused on emerging markets and frontier markets. What happens with these countries is that they are used and adapt to this kind of inflationary market and pressure, I would say. This is the feedback we're getting from our institutions. It's something that definitely poses challenges to them, but they are used to it. They have gone through cycles of hyperinflation before. So usually the management teams, they know how to react, how to adapt, and how to monitor so that their businesses continue operating under this kind of situation. So far, luckily, we see that they remain resilient. We haven't been seeing a declining trend in terms of returns or like an increase in delinquencies. Then on your question about the increase in interest rates, normally when it's coming from inflation, it takes months to really reflect on pricing of our investments, or also, you know, the reaction from the markets. We've seen that the developed markets, they're much more reactive to this increasing interest rate trend than with the emerging markets. They're going on a slower pace. And actually, the research and what we're hearing also on the ground is that this is expected normally to peak in the emerging markets around October, November of this year and start to decline. While for the developed markets, we see a trend that may persist for a bit longer. So, of course, it's a challenging time, but it's something that we've seen before, and we can see that they are handling and managing. Yeah.
Maybe I'll say a few words on the Blue Orchard side. So we actually had a strategy for Latin America. We used to call it the Obama Fund. This is an initiative that was in the aftermath of the financial crisis, where clearly the big topic, you know, in the middle of 2009 was really how we can ensure that financial institution entrepreneurs still have access to liquidity when everything was drying up. And back then we structured a fund initiative that resulted to be very, very successful. And this is just to say that especially financial institutions, but also financial institutions in Latin America have demonstrated before, both during the financial crisis and during the COVID period, they've been extremely resilient, you know, to large shocks. The political situation, I think it's another topic. I totally see the fact that, you know, there may be issues on, you know, investors, let's say, having the appetite of these political risks. But again, I would say, if I may, that this is not new to Latin America, unfortunately. I'm Italian, so it's a bit like talking about Italian politics. And so investors in the region have seen, you know, the ups and downs, and I think there are still very, very attractive investment opportunities. But I don't know if anybody else would like to chip in on this question, or should we move to the second one? Shall we move to the second one? Then who wants to take the question from the Barclays colleague?
I'm happy to start.
Super.
Not taking off the UNDP hat for a second, I was in charge of an impact investment advisory offering at UBS for the ultra-high net worth segment, so I think speaks probably closely to where the Barclays clients and colleagues are. I think what was key was showing client demand to persuade the bank to put products on its shelf, but client demand didn't come until the client advisors were capacitated to be able to speak about impact, so oftentimes it was an impact specialist within the client meetings. I'm sorry, we're getting a bit off the direct topic, but I think it's one where the bank needs to focus on a set of sector criteria or SDGs or whatever, but then capacitate its client advisors to be comfortable to have the conversation with the clients first. And then I have no doubt that you're going to find significant demand that you can take to your senior leadership.
Excellent. Maybe we take, I saw before some, yes, we have one hand here.
Hi, thank you very much for this great panel. I am Sebastián Álvarez, and I'm a researcher at the Graduate Institute and the University Adolfo Ibáñez in Chile. And I have a question. Well, Latin America has a long history a turbulent history on indebtedness and debt payment problems. And we know that financial and political instability affects country risk and becomes an impediment for reaching the international capital markets. So I wanted to ask you if you feel that that's a barrier also for when it comes to sustainable development markets and financial markets, and how do you manage to solve that kind of problems? That's my question.
Maybe we take a second. Yes, you're being patient.
Hi, Keith Agoda from Producers Trust. Just a couple weeks ago, the 33 ministers of agriculture across the Americas have united on a climate-smart agriculture strategy, which will be rolled out at COP27. One of the key challenges is private sector finance to help develop this transition to agroforestry and regenerative agriculture across these countries. So it'd be great to hear what you all are doing and what you see as a scalable finance solution.
Fantastic. I wonder, I'm thinking about Beatriz, because I think the fact that you know, the case study on FASA's Ecuador, as we know, Ecuador is, you know, certainly a challenging country, has actually been in the past, you know, not, you know, served its sovereign debt, has been in default, and maybe you want to say something about, you know, some what we could call basket countries that actually are still investable in terms of impact and sustainable investing?
Yeah, exactly. I think definitely country risk, political risk, they are extremely important factors when we're looking into impact investing, because normally we're looking into emerging and frontier markets, which I tend to say there is no perfect country, there is no perfect scenario in any of these markets. There is always something happening. They're so dynamic, there are new events coming all the time. But I think, at least at Symbiotics, our approach is that we do not put concrete vetoes on certain countries because of either their history of defaults or even political instability that may be ongoing even on to today, because otherwise that would really limit the impact that we could promote. Our approach is really to look at a very diverse basket of countries, which helps us to keep a very high level of diversification in our funds. That's one of the things that is attractive to our investors, that and emerging markets, they're volatile, but they don't necessarily go at the same time through their crisis. And our approach is mostly to strongly believe that there are strong players in each of these countries that know how to surf the wave. They know how to manage these risks and still conduct a very successful business. So definitely, if I can give another example, we were talking about a lot our investment in Ecuador, but we operate in so many other countries in Latin America, including Haiti, which I think, you know, just for the history of natural disasters, that it's a type of risk that it's almost out of control. But still, we managed to find partners who know how to deal even with these kind of extreme situation, and with whom we have been having a relationship for many years, that are, you know, doing their operation in a great way and promoting impact even in a very challenging country. So it's really with the approach of looking into diversification. I think it's important, and really selecting the right partners who have the thick skin and the knowledge to go through these type of risks.
I wonder if, Danke, you want to say something about the experience, you know, clearly especially in Mexico with this bond issuance. I'm sure you have turned around every stone.
I can highlight that. I wanted to point to, though, a forthcoming facility, so something concrete that UNDP is working on, and it's with the blessing of Nature Finance, who has the panel in just the room next door. So we're looking actually at a sustainable sovereign debt financing facility, which would pool risk insurance, or so political risk insurance, by quite a few of the insurance companies that are in the Building Bridges Week this week, as well as the development finance institutions that have capacity to provide credit enhancements, et cetera, but oftentimes the countries simply don't know how to access this financing. I think we did a big landscape study, talked to entities like Swedfund, and said, well, how would a country like, I mean, we always use Rwanda as the example, but we can use any other country, access this technical assistance, or indeed this risk financing? Is there a template? And they said, no, you know, it's a convoluted process. You have to identify the right person. So the idea is to put together, in fact, a facility where countries could come and access. So despite challenges in the interest rate environment or the lack of fiscal space, et cetera, they would be provided with access to this kind of instrumentation. But with regards to where we are, I think with the interest rate environment today, yeah, we're doing research on that right now because we're getting the questions from country offices. The response from the European Commission last week, I was in Brussels, said that we should look more towards local currency issuances. So again, I know Tim has a large local currency exposure, but I don't have a good answer. But hopefully this facility will be one that actually responds to the needs that you just raised.
Yeah, maybe from Alpha Mundi's perspective, and thanks for all these questions. I think they express a concern about what's happening and what's going to happen worldwide and in Latin America, and these are very legitimate concerns. We know that since the 2009 financial crisis, by and large, Latin countries have improved, right? And they are more resilient now to external shocks than they were before. But at the same time, they've been tried and tested during the pandemic, and this has really left a few countries on their knees when it comes to being able to issue more debt to finance subsidies for the economy and its people. So from Alpha Mundi's perspective, what we're looking at is, on one hand, because of the increasing inflation and rates, we have an obligation when we issue new loans to consider this environment and perhaps price loans at a higher rate. So the working capital costs for these companies are definitely going to increase over the next 12 months. And I'd love to hear from the entrepreneurs on the panel, what are your plans when you see your working capital costs increase by 25 to 50%? Or when you see that your equity round is delayed by 12 months because investors are a bit jittery because of market concerns, right? I'd love to hear that. From a broader perspective, I think we have a chance as impact investors in helping these SMEs weather the worst, right? And it's something that we've already done. We've seen a lot of collective action coming among impact fund managers to support SMEs during the pandemic. For example, we agreed to delay principal amortizations by 6 months, 9 months, 12 months. But this is really, as Mayor Teresa pointed out, cash is king in these trying circumstances. And we need to do as much as we can to encourage leadership of SMEs to properly assess the risks. They have to tighten the ship, right? They have to reduce costs. They have to, if necessary, be more conservative on their growth ambitions for the next year, and be wary about delays in investor decisions. And I think that if we share the burden of these adverse market circumstances between the companies and the investors, most of our companies are now very resilient because of the pandemic, and so they will still be able to sail through. But these are serious concerns, and they're probably going to increase over the course of the next 6 to 9 months. Yes.
Guillermo, do you want to a quick reaction, and then we move to the question of the colleague from Credit Suisse?
Yes, sure. I mean, it's not just because of the environment that we have been experiencing lately, but since we started in Argentina, Argentina is a very unstable economy, and we were dealing with high rates inflation for the last 10 years. Right now, it's almost close to 100% inflation rate annually. So we are it's one of our skills to deal with these kind of things. So when people ask, it's like, for me, sometimes it's like, hey, we were born with that. It's not something that scares us. And once I heard this about speaking about the investment, which it's obviously something that is happening to us at this moment. Everything takes more time than it used to be 6 months ago. I heard this saying that they said that a startup doesn't fail when they run out of money. They fail when they run out of strength to keep fighting. And I guess that in Latin America, most of the entrepreneurs, they are not just talented, high talented, and they have great ideas. They are mainly resilient. And this is a great aspect for an entrepreneur to have. And most of them, they have it. So I guess we can deal with different scenarios that look very risky from the outside, but we are quite used to be, working in these kind of scenarios. And I understand that maybe in Europe or in the US, it's really like unbelievable to hear like, okay, you are dealing with 100% inflation rate. How are you still alive? But yeah, you managed to do it.
Excellent. So I can certainly reply, but I wonder if there is any other views on regenerative agriculture, any strategies, yes, Tim?
I mean, this is just an anecdote. Obviously, the Amazon is burning right in front of our eyes, and by and large, agriculture is not sustainable in Latin America. In our portfolios, it is, and we tend to push even for organic practices, but it's still the minority. I would encourage you to speak to the Meraki family office that's in the Netherlands, but it's a Brazilian family. They've done a huge amount of work on regenerative agriculture in Brazil, but it's very relevant for all markets of Latin America. And they will be presenting their models in collaboration with other investors in regenerative agriculture at a conference next year in Brazil in August, organized by the Latimpacto Association. And to the point, perhaps connecting that to Barclays, it's my greatest wish to see a greater share of our investment capital for impact in Latin America coming from local sources, from local wealthy families, from local pension funds, banks, etc. And I think that in the past, wealthy families in Latin America tended to just focus on philanthropy, and they dissociated their investments and their business, and this is changing now, perhaps also with the new generation. And so there is an association called Tonic that is very good at helping investors understand the set of opportunities and collaborate with other investors in the same wealth segment to invest in Latin America. So hopefully we'll see a merge of the two trends and more local funding for local solutions. Thank you.
Exactly. And maybe just to say a few words about natural capital in Blue Orchard. So at Blue Orchard, we have historically been quite active in climate finance. So climate mitigation is, we basically tackle it with a sustainable infrastructure strategy, climate adaptation with really a climate insurance strategy. And we were approached more and more by investors that really look at the natural capital pillar. So effectively, how can you also develop an investment strategy in a nature-based solution? We are in the process of structuring an initiative. It's called Carbon Impact Solution Fund. And interesting enough, we're looking at opportunities globally in emerging markets, but with potentially a first sub-fund being structured in Brazil. The strategy is really a mix. I call it a carbon plus approach. Because I think when you look at timber management, sustainable forestry, there is a lot of strategies that are really only playing the carbon market. Why we call it a carbon plus? Because we're looking at biodiversity, we're looking, as you said, at regenerative agriculture, and really having a bit of a, if you want, holistic approach where we're looking at environment and social and also potentially, at actually engaging with local communities. So this is still in the make. Actually, it was presented yesterday as one of the shortlisted initiatives that are in the process potentially of having access to technical assistance under the CIFI convergence scheme. But it's certainly a topic that I find very, very interesting. I also think that from probably from a large bank perspective, there is a lot of potential because you could potentially offer either a return to investors or carbon credits. So the combination of the two could be pretty interesting in terms of approaching different group of clients.
Maria Teresa, may I add a quick example to the colleague's question? So JBS, the world's largest meat producer, issued, I believe it was just last year, a thematic bond or a green bond, but linked to more sustainable meat production. So I think it was $1 billion. It was heavily criticized that they often don't deliver. They're a big proponent of deforestation. but they set very clear KPIs linked to reducing land conversion, reducing deforestation. So around their cattle practices, it's all very transparently shared in terms of how the framework is set up. So I would encourage you to look at that. It was heavily oversubscribed. I think 5 or 6 banks involved, so one clear private sector example. And I would also encourage you to talk to the WWF, who's right now working on deforestation and conversion-free, hopefully, policy making. It's not well covered in the EU taxonomy, so not really on the radar of European investors, but legislation was very recently passed, I think 2 weeks ago, to ensure that commodities imported by Europeans are going to be free from deforestation and land conversion for commodities. So I think a few regulatory pathways that should help.
And maybe in addition to that, the science-based target indicators are also being, really expanded to biodiversity and natural capital, which is also important because really the methodology has now been developed across different sectors, but not for natural capital. So that's one, certainly another, let's say, regulatory framework that could help in tracking impact. And the other one is TNFD. That again is being developed for natural capital and biodiversity. So I think there is a lot of action taking place on natural capital, which effectively demonstrate that there is, a lot of investor appetite for an asset class that is still young. As I said, actually in Latin America is pretty developed compared to, sustainable forestry in Africa or in other regions. But I think it's a very fascinating investment strategy.
And maybe also to bring this topic back to Geneva, we are one of the world's capitals in commodity finance. And I haven't seen many commodity finance organizations at this conference. And I spoke to their association secretary just before the summer. She had just begun in her function, so she wasn't ready to mobilize her members for this conference. But I think, the Amazon is being destroyed for that reason, right? It is because we eat meat and sugar, and because these commodities are more easily exploited if you just burn the forest. And I think any solution, any long-term solution, any solution that is systemic and at scale needs to involve the corporates and the commodity finance companies that are financing this issue. And I don't want to point fingers. I think it's just that we didn't have the data before. We have the data now. We have the technology. We have alternative models of operation that can be implemented. And it's just about spreading these best practices to the most important stakeholders.
Excellent. So I would love to really close this session. And first of all, thanking the panelists, Juan Diego, Beatriz, Guillermo, Tenke, and team for really sharing their views. Also like to thank UNDP and Alpha Mundi for giving us the floor. Luisa for coordinating all the different stages and getting us all here on time. And for all of you for having, attended this session. So thanks again, and looking forward to continuing building bridges. Thank you.